All right, so some of you guys may have noticed the original idea, the original title of the class was going to be areas of interest. And the reason that I changed it to liquidity is because I think that it's more important that you understand liquidity, because without that, I think that sometimes, using points of interest can be a little bit more harmful than good because they're a little easier. So let's just think about it like this. If you just understand what an order block is, then you want to trade every order block. If you're looking at price from the perspective of just fair value gaps, and you're going to want to short every single fair value gap, right? So, but if you understand liquidity, you may have not shorted this fair value gap. So, for example, in this piece of price action, we are always moving from one area of liquidity to the next. So we're going to start from down here, right? Now this is where we get our smart money reversal. And some of you guys may spot a pattern within this that we're going to go over, and feel free if you want to drop it in the chat to call out before I do. But in this pattern, we have our smart money reversal. So our smart money reversal is whenever we get that displacement break structure that we were talking about after taking liquidity. So when you see this, when you see the market make this move, right, the classic smart money concepts entry model, right? It doesn't always have to be used as an entry model. It can be just used as a signal to switch bias, so to speak. So, for example, once we have this pattern, and I'll let you know what it is in a second, but we have a reason to be bullish on the lower time frames. Now, if we look at the higher time frames, we also have taken out, let's look at a 4 hour. We've taken out a massive liquidity pool, all right? And then we've taken out liquidity again. So we have a reason to look for a bullish narrative. And so this smart money reversal down here would hold a lot of strength, because like we were talking about structure, when we get this displacement, that's kind of where we ask ourselves, were the institutions involved in this? Well, we took liquidity once here, we took it again, and then we're now sharply pushing back up into the range, right? So whenever we have something of that nature, we understand that this is likely to give us a bias switch. And before I get too far into it, there might be some people, I doubt there are really any watching that don't understand at least what liquidity is from a very simple point. But liquidity is basically just where there are stop loss orders, or where orders at all remain in the market. So if we are short here in this piece of price action, where is our stop loss going to be? It's going to be right there, right? If you don't understand or don't trade smart money, or maybe, and it's not just to say smart money. It's not like everybody who doesn't trade smart money is just an idiot and they just use terrible stop losses. But a lot of people, if you just ask somebody who is newer to trading, they're going to say this is a sell wall, right? Oh, price hit here, hit again, it can't get above it. So they're going to put their stop losses up there. So if we are a market maker and we're looking to move price towards liquidity so we can participate, because whenever you are pushing a button to buy and sell, whenever you and I buy, sorry, whenever you or I buy or sell, it's very easy. We just push a button, price, it doesn't necessarily have to move a lot, or it's not going to move a lot because we did that. And the reason for that is we're not soaking up a lot of liquidity. So the reason price moves is just moving to where there are orders. So this is where footprint traders come in, is they look for a lot of liquidations. And that's similar to what smart money is looking for, because we're just looking at the market as this machine that is, it has to keep moving. It has to sustain, it has to, price has to move in order for people to want to be involved. So we have to move to where there is an ability to move. That makes sense. So if we're moving from, let's just think of it, I've used this example with you guys before. Let's just think of it like all these little liquidity areas as like a pit stop, as a gas station. And this car is on a never-ending road trip. And in order for it to keep going on this road trip, it has to stop at these gas stations. And it goes from one gas station straight to the other. And that's all it's really traveling to. There's no destination, because the journey is never going to end. So it's just traveling between one area of liquidity to the next. And that's always happening. And now a lot of people misunderstand that when they're starting. This is what I misunderstood, is they think that, you have this big, massive move and you have buy side, sell side. And, ICT says something, you take the sell side, you go for the buy side. Now, this is true, but on a much smaller scale. So let's just use an example on this price, bit of price action. So let's say here, We went from sell side, we took sell side here. So where's price going to move straight towards? Is this going to be our buy side we're moving towards? Not necessarily. It's going to be right here, right? Hold on. I'm going to sneeze. Excuse me, guys. Hope I wasn't too loud. But we move, we're expanding up towards an area of buy stops, right? And any of these areas, it doesn't have to be, you know, this has to be the only buy side. You know, there's going to be buy side above this high. So what I look for is where do we move off of aggressively? First off, where are clean areas? This is easy, right? Like these equal highs, that's easy liquidity spotted. But other areas, you know, where do we move up aggressively? We moved really aggressively off this right here, right? And if we're looking at this to be a reversal, you know, we're under an old liquidity pool. So there's going to be liquidity all the way up on this move because each push down is manipulated. So that's what I want you to think about is if the structure is telling us, you know, overall bullish on a higher time frame or telling us that we might be in retracement mode, even if we're bearish, then all of these down pushes, you know, in a bullish market, all of these little, you know, drop-based drops, these are all just little gas stations. Think of them like that. All these little areas, right, where we move expansively off of because those are manipulated. Because again, if we're bullish, then any down move is manipulated. So think of it like that. If we're bullish and price is pushing it, and when I say bullish, I'm not saying that every market structure on every time frame is bullish. I'm saying that right now our bias on this time frame, the 5-minute time frame, is to go up. So that doesn't mean that we are in an uptrend for, you know, necessarily that we're just you know, never ending, have to look for only bullish struck or bullish price action in an uptrend. But let's say if we're in a downtrend and price is down here and it's done this number, that's still bullish to me as a day trader or as an immediate bias because we're not necessarily investors when we're trying to trade these markets intraday. You know, that would be, you know, yes, this is still a bearish market, and maybe your strategy doesn't trade unless it's pro trend, and that's fine. I have strategies like that too with swing trading. But if I'm trading, I'm trying to be very precise and I'm trying to get opportunities more than, you know, once every, you know, blue moon. I'm looking at this as bullish price to me in this day because price is telling me we're moving up. So right here, that's bullish to me. Now, when we get up in here and we switch down, right, that's where I become bearish, right? So whenever we're looking at this piece of price action, we come down and take out a low. So this is our this is our last little rate on stops. Now, again, we didn't know that until this happened. This is a great example of displacement. Full-bodied candles pushing right through a high and also disrespecting, you know, if you just look at it like this, you know, some people might say this is an order block or this is supply, right? Or maybe this whole thing. But again, it's all about context. You know, we're not looking for it to continue being bearish because, again, at 4 hour, we're already taken liquidity once here, and now we came down, and then we took it again in the lower time frames, and we reversed. So you're not looking at that in that context. But this is a good example of not respecting order flow. If you guys watch my video on YouTube about bias, I talked about how to use order flow in the sense of what order flow is being respected. You know, was this a bearish order block? No, we blasted right through it, right? Then engineered liquidity above it, and this is a breaker at this point because it's the last up candle before a raid on sell side liquidity. So when we look at all these lines, if you've been watching this as I've been talking, price is just moving from one area of liquidity to another. So for instance, we move from sell side here, push up into the buy side. The next area of buy side is right here. You could say low hanging fruit was here, but this would be your, you know, a very immediate draw. So we are pushing up, drawing into this high. What have we done? Hold on, it's only just, I don't know if someone just talked. I could hear my headset. Kind of. Hold on. Hold on a second. Were you actually saying something, or is it background noise? I just got my headphone on. I'm gonna start mute you to the end. No big deal. It's fine. But just wait till the end, and then we'll go over whatever. I don't know if there was a question, but we are looking at price above this area of now. It's bullish order flow at this point because we did not respect the bearish order block. You know, if we just looked at it when it was back here, you know, this would have been an order block, but price went above it, And we'll look what we're doing. You always want to look at it from the perspective of market maker. We've got little equal low, or it's right in front of that. So that's going to be sell stops. So after price hits the buy side, it moves up a little bit, trades into a area of interest, which we're going to get into in the next lesson. But oftentimes the combo you'll see is price is going to trade from a liquidity pool to another liquidity pool. And then after that, it's kind of in question when it's going to reverse, and adds your, what adds probability is an area of interest, like a fair value gap or another breaker block or order block, or just any of these tools we use to read price. So we take liquidity, move to an area of interest, take liquidity again. So look, we went from buy side, area of interest, sell side. Guess where we go? Straight from there. Buy side. And then here is where a lot of people get confused, because they'll say that in this example right here, this is where I used to get so confused with smart money. Say, okay, well, price goes from sell side to buy side to sell side. So then they'll look for this. They're going to look for that because that's the sell side. When we are in a bullish market, you do not expect price to come all the way back down. So, let's say we have a high right here and price moves up into that buy side, but the market's still bullish. Are we going to just take, if that was the case, the market would just do this all the time and it would just continuously range. That's not how this works. We create sell side. So this is what really unlocked things to make sense for me. So, again, here's your buy side and sell side of this range. And then let's say we're going to say, okay, well, price is going to take sell side. It's going to make sell side by doing something like this. So we look right here. What did it do? It came down, moved aggressively off an area. Right? So that's creating that sell side. So you see we came down, we took sell side. So it went from, again, buy side, creating sell side, creating more buy side, but then we took the sell side. So we didn't have to take the previous low. So once we do that, this is a more bullish order flow, and we're going to continuously move towards highs. Now, again, when do we look for this to stop? Because we go up, buy side, we come down, sell side creation, and then we pip it and move off. And this is why I like requiring a liquidity sweep whenever I'm entering a trade, because if we don't have liquidity being taken, a big three formation, a power of three, I'm assuming that's what you mean. Now, it's funny you say that because I see both, right? No, you're good, you're good. Big three, power of three, I know what you meant. So this right here, but what I was talking about is a market maker model. So I do, and this is where these coincide, because a lot of times on a higher time frame, you'll have a power of three, and then on a lower time frame, you'll be able to find market maker buy and sell models to complete it. So here would be the overall power of three, right into the highs, or actually I drew this wrong. Sorry. This would be how I draw it. Right into the high right there. Now, the market maker model, this is where they get a little bit, this is a good example because a lot of people, that's why I think that video I put out, I think it helped a lot of people because everybody's looking for like a perfect market maker model. So this in my book was a market maker model because we had a small consolidation for a very short amount of time, rapid push down, run to support, quote unquote, and you can call it whatever you want. And then we had our smart money reversal, accumulation, reaccumulation, distribution to the high. Now, again, it might look a little jumbled up, right? It doesn't look as clean as some of the people think whenever they learn market maker models, because market maker models are more of a conceptual model. So for instance, it's more about what's going on. It's not about how does it look on a chart. And that's everything that you use in smart money. You have to think about it in the narrative of why is it happening? Why is this happening here? What would make sense? And then it starts to really click. And that's when you start to train your eye to look for higher quality stuff, and you get a little pickier because you want to make sense of things. Why would the market be putting a market maker model? We get a small consolidation, another small consolidation, right under it, immediate smart money reversal. Anytime we get this is what triggers me to look for a market maker pattern, where we get a small consolidation, push down, and then a reversal. Then I look up higher. When that happens, I look, okay, was there something up here that did the same? And then that gives you an easy draw. So one of the main key concepts that I want you to have about liquidity is that price is always moving from one area to another. And that doesn't necessarily mean it's going to go from the high all the way to the major low and all the way to the major high, because that's what a lot of people get confused on. And that hopefully will change change the way you guys look at it. So it definitely helped me a lot. Said use this to into your start for UCAD and fucking killed that trade. Hell yeah. Cassius, I just realized you said same. Oh, you don't have permission to speak. Yeah, I don't know why. I'm gonna have to figure out what Playboy. I asked. He said it was. He showed me that he changed the settings, but it seems like there's some weird role or something that needs to be changed. So we start off with a little bit more advanced stuff, but let's just for the people that don't maybe necessarily get a full grasp on liquidity. Let's draw some examples. So in this example, pretty ugly. Let me fix this a little bit better. So we have a lot of this going on YouTube. It'll be just for you guys. It's not going to go on YouTube. It'll be just for people in Playbit. But yeah, you'll have a video of it. So in this example, when we look at price, a lot of people would, if you're just looking at structure, you'd say break a structure. Okay, we had a fair value gap. We're just going to imagine we have a fair value gap. And then maybe another fair value gap here. So this is bullish order flow. And we'll say that this was your high back here, or your series of highs. And you're going to say, okay, this is easy money. We got equal highs here. Or let's just look at this from the perspective of somebody who doesn't understand liquidity. That was the idea. Hold on one second. Sorry about that. So whenever we're looking at this, people are gonna, if you're just using structure, you're gonna say, okay, we're moving up, we're moving up, and then let's say that price does this, pushes up, and you're saying this is our our bearish leg, all this right here. So this is our impulse leg, and then you say you get a big push up here, and you're gonna say, okay, well, now the market's bullish because we got this push up. But let's say that push up doesn't necessarily close, and then it just kind of starts to reverse and does this model. Or, more of a reversal and does that. Right? So let's say if we get that reversal and people now want to be bullish because they say, okay, well, this is now a bullish range. And this is what I'm looking at. And I'm looking at an order block that was created right here. And then price comes in. This is with just structure and areas of interest. So you might even get a reversal here, right? Let's say price goes up, it takes out this buy side. Because remember, price is always moving from one area of liquidity to the next. So let's say we come up here, we hit out some buy stops. We come down, you take out sell side, right? Then you're going to go towards buy side. So you might come up and take out this high. And this is where you get these really complex ranges. And that's why you need to understand liquidity. Let's say you come down after that with force. And you're kind of like, damn, okay, why is this happening? I was in a trade, I got in here. After the confirmation, I've checked all my boxes. Price should go to my target, and then price does this number. And people are like, the market's rigged. What the fuck's going on? But it's just understanding where these very obvious areas in the market are. So if you have equal lows like that, anytime you have a big push that gets reversed pretty quickly, and then you have easy targets below, you always want to be targeting that. And you can use structure to kind of confirm that. As soon as you get this, right there, as soon as you get that, that's where you look at that as your draw. Because that's how I've gotten questions like, why did you call this as a draw on liquidity? And that's usually how I will look at it. If I'm calling something that's very far away, that's the way that I'll look at it. So like, for instance, look with ES. Why we called for 4,200 for so long? Look at that. I mean, it's just that smooth in the market. Because a lot of people would say, and I got so many questions on Twitter about this. So everyone's like, well, what do you mean? We're bearish on an external level. Price came to a premium up here. We traded into an order block. We got a displacement down. Why am I looking for higher? This goes against everything, right? No, it just simply doesn't, because it's just understanding liquidity, right? So whenever we have a market that's this clean, especially on a high time frame, you're going to see that get taken out. It's gonna happen. And you need to be confident in that. And if it doesn't, because I guess I shouldn't say it like it's like 100%. The main takeaway I want you to have from that is that it's very important that you are confident in that. Like whenever you create a bias based on liquidity, you don't change it up because you had an order block get respected, or you don't change it up because a little displacement. You're using the structure as a tool to help you navigate the market. You're using displacement as a tool to help you indicate where large players are in the market and where they are active and what is price reaching for. Is price reaching for something or is it reversing? But you also have to keep in mind these very, very obvious areas, because that's always going to get tapped out. It's never going to be that easy. Imagine if it was just that easy to short, like price did this and you just said, okay, short the stock market, stop loss here. They're not going to give you that much of an opportunity, especially right now with the stock market, the way everything's moving and everything's super manipulative. It's not very easy for people that are newer, but it is easy once you see it in that way. So once we get into areas like this recent bit of price action, and we've taken those equal highs, we're kind of at an interesting point, because you have this displacement up. You didn't really hold the displacement like crazy here, but I could see, go to 1 hour because I have some stuff marked already. I see bullish order flow still on the 1 hour, and I haven't really seen in the daily. There's no displacement down. This isn't displacement. This is consolidation. If you look at the 4 hour, the displacement is still up. Sorry, excuse me. Keep sneezing. I don't know what. Oh, actually, I do know. I was with my friend's dog last night. But anyways, can I let us know at the end where this video get posted? Yeah, they go to YouTube. It's a pinned playlist that's in lessons. That's like whenever I post like any video I post, I always say that too. It's like the pinned. If you go to lessons and then pinned lessons, there's a playlist. But I'll post the link to the video again today. But it's just easier. If you go to pinned, it's literally the first one. It says pinning this. This is the link to the entire playlist. So that'll be all of the private classes. And then when I upload, it usually takes about an hour, 2 hours sometimes, because I record everything in 4K, and it takes a little longer, but it should be up there within like an hour or 2 hours. But let me know if you can't find it. I want to make sure you're getting the most out of it. So yeah, you're not good. You're not good. So whenever we're looking at this on the higher time frames, I still see, let's just look at a different charts because that's clean. What I see is price moving from area of liquidity. Remember, this up here, we just took out that high. So then price is coming down, create some sell side, we take it. All right, consolidate, take it, push up. We don't really take any buy side on this time frame. On the 1 hour though, we do. Take out all this right here. But this was with news too. So it's kind of, you got to take certain things with a grain of salt. When we have news, it's going to be a little bit, kind of a little fickle. But price comes up, we're just consolidating, then we get this massive push down. Now, this is displaced on this time frame for short. I think that we'll see more shorts coming out of most likely this fair value gap. Maybe not though, because it's pretty close. We're already in it. Maybe we go up higher, but maybe go up into this area. But once we do that, I think we will come down. We'll take out some more sell side, and if you look, we're starting to engineer that liquidity. So we look on the 1 hour. We have a very easy area of sell stops, right? Because if you're looking at the range, the entire 1 hour range, it's this right here. So we've got liquidity and a discount. And this is a great example, actually. This wasn't where I was getting at, but this is a good example. So anytime we have liquidity in a premium, in a bearish range, if you have just an obvious area of stops, which means an obvious area being equal highs, or an obvious area being an area we pushed off of really rapidly, that's not the main high. You can think of this as the protected high. Usually it won't get hit. Any kind of liquidity, like this, or like this, often will get targeted. So whenever you're in retracement mode, you can be looking for price to move that direction. So, wait, are you talking silent? Hold on. I just not saw. Did you say something? I don't know if he's.
Not muted. Hello.
Wait, my bad. My shit was. I don't even, I saw you talking. I had my volume turned down. That's probably the same thing with the other guy that was talking earlier. So if we're looking at price in the context that we're likely to target liquidity that's in a extreme. So we're just gonna so an extreme for a bearish market would be premium, and an extreme for a bullish market would be discount. So notice here we took out those highs. Notice here we have this right here. So when you're developing a draw on liquidity, we came to premium, we took out, oh, you're fine. We took out a high. We took out that high time frame high. We've got some displacement down, right? Had the second area of distribution. Got this displacement down. Then when you have that, you're going to look for this low. So for me, the next major draw on liquidity is going to be this right here. Now that's on this time frame. If I go to a 15-minute, you know, we might see a little higher pricing. We might go into these fair value gaps. And we can use the lower time frame structure, just like we're using this 1 hour structure, to get our general idea of where the market's going. If I think, you know, price is going to go lower to here, I want to see us trade into these higher time frame points of interest. I want to go in the 15-minute or the 5-minute, and I want to see this kind of move. Now it doesn't have to be this extreme, but a displacement, right? Something like this, right? Again, that's our tool to tell us which way the market's reaching. And we build our narrative based around our overall structure on the higher time frames, liquidity, and then we use the lower time frames and just internal structure on the higher time frames as a tool to tell us what the market is reaching towards. So right now we're pushing up. This isn't really displacement. We're kind of coming up wick. We're just taking out liquidity. So we could see a 3 drive. We came up, tapped again, tapped. So we could see that and then push down, or we could see a little bit higher. We haven't really got there yet. So what would get us there? Well, if the market opens, maybe we consolidate, move up, and then a massive push down. And that would be okay. Well, if we do that, I'm looking for this low. Just that simple, because I'm basing it off the higher time frames. I'm using the lower time frames to confirm my my narrative that I've built using liquidity and higher time frame structure. So just always look for liquidity, like obvious liquidity like this, in an extreme to be taken. And I'm not saying that every single time it will. Nothing works 100% of the time, but that's usually the way I look at things. Now, another way you can kind of try to look for levels is stuff of this nature. So when we talk about order blocks, we've talked about, there's a video called Order Block Simplified. It's the one before last in this class. So we close under a low, and this is a high value order block. That's what I like to call it. I don't know a better name for it yet. But we close under the low, and we have a full big bodied candle. This to me is going to be more valuable than trying to use this right here, because a lot of people trade supply and demand. They got a good trade off that. But this is where I see a higher value for a full reversal. So I'll show you another example of this. 15-minute, I think I saw it. Yeah, here's another example of this. So price came down, closed under this, and then look at this. And they're not really activated until they're engulfed. So we came up, we engulfed it here, price moved, and then remember what we looked at in the lower time frames already at this example. We were generating equal lows as a lower time frame breaker. But on the higher time frame, the 15-minute, we closed under this, and then we came to that order block and moved right away from it into liquidity. So those order blocks, it's kind of off topic, those order blocks are very high value. Do we have a video on how Fed meetings affect the market? I think that it's not good to try to figure that out, in the sense of you're just going to try to trade them. And I do have a video on how to trade after news. It's on, that one's actually on YouTube. It's just basically look for a consolidation and wait for an area of liquidity to be attacked, and then shift out of it. It's the same thing we do. It's just, but you wait for the news. You don't try to trade news for a couple different reasons. If you're trading on a funded account or have any hopes of trading on a funded account, you will get destroyed trading news if you're wrong because of slippage. And people say like, "Oh, I'm just only risking a little bit." It's like, no, you're not. You're putting your portfolio to the market, to your broker's mercy, and they want you to fail, right? They want your free money. So never try to trade news. But I do have a video talking about trading after news. You basically just look for stops to be taken. But even if you put your stop loss, bro, I got fucked on a trade that was 20R return just because they spiked the spread. Damn. Damn, that shouldn't happen. That means that what broker are you using? A sketchy one, yeah, sounds right. Yeah. No, I mean that means they're just trying to fuck you if they're doing stuff like that. You shouldn't spreads. I mean, if it's 5 p.m., just always be mindful that 5 p.m. Spreads widen. That's across the board. So maybe if that's what you're talking about, but I don't know how it would fuck 20R. That's a little crazy. Can't send a pic, but I'm gonna ask you. That's fine. Just put it in you can put it in crypto chat or wherever. But and then gold let's just take a look. Why not? But we'll look at it in a sense of liquidity because gold moves pretty wild. I'm just gonna delete all my gold stuff. So when I'm looking at gold here on the weekly time frame, the weekly is kind of like my king time frame. This is like the you know the top time frame. Really, I pay attention to monthly, but look at this. All right, so look at this range we had for so long on gold. We go back. I mean, just this was very frustrating for a lot of people, right? The price now has came back down under these lows, and now we pushed up rapidly. So now, in this example, and this is why I've targeted 2100 gold. People are gonna say I'm crazy. People have said people are like mad at me on Twitter. People are like messaging me, and it's funny the people like that I can tell because they're not trying to hear that because they're bearish on it or for whatever reason. But you know, gold to me on a monthly is extremely bullish, right? On a weekly, whenever we have these equal highs, and I could be wrong, who knows? But when we have these kind of weekly highs, that I just see that as too clean. At me in Forex, let me take a peek. Hold on. Paid 2,500 for this account. 50. Wait, what? Paid 2,500 for 50K. There's no way that's you paid 2,500 bucks for a $50,000 account. Oh, it's instant funded. Yeah, I don't know. I mean that I would say it's just a scam, but I don't know. You may have gotten paid out, but funded trading plus. That's people have been asking me about that. So I would be very mindful because that's a very predatory company. Just that they're offering that at all for 2,500 bucks. So like for instance, $2,500. Okay, actually, if you spent a little more, couple $100 more, you could have 600,000 from my Forex funds. So that would make sense, I guess. There's just that's a predatory model. There's no reason you'd give somebody 50K unless you thought they would fail it. And you said 47,500 drawdown, so you can only go down 5%, I'm guessing, and the drawdown locks at 50. Yeah, I mean, if it works for you, I'm not trying to be like a Debbie Downer, but I would never recommend someone to do that ever. Like I would never recommend because like the idea of getting an instant funded, I guess it could work out. You know, you might as long as you make your money back, you know, you're in the clean. But like I would say the reason that business works for them is the odds of making back $2,500 from them statistically are very low because if you have somebody, and I'm not saying you, I've seen you've been doing really good facts, but people in general that like can't like that you know that don't understand trading, if they can buy an account, they're like, oh, this is easy because there's that common misconception that the more money you have, the more money you're able to make. And I'm sure that a very short or a very small percentage of people get $2,500 back. So that actually makes sense. I don't think it's probably a scam, but it's very predatory. Because if you you know to make 2,500 from 5K 50K at 70% split, That's not necessarily that hard, but that, I mean, if you could do that, then just take it funded. If you can get back that 2,500, then you could, that's very close to just passing a funded account. But it could definitely work. I'm not hating it. I'll do your thing, kill it. But for a new person, I think that would be, people would get fucking whammed off that. Have I heard of elite funded? God, I can't fucking read. Um, uh, oh, I'm just reading all these. I That's the broker I use, Doc's team. Yeah, I'd say it's not a scam, but it's definitely very predatory, and they probably make a lot of money off people. Elite trader. I feel like I've heard of that. I think that's like a that's like the one with the bull on it, isn't it? Yeah, I've seen them. I don't know much about them. Aren't they like a? That's pretty cool. You can trade multiple accounts and everyone log in. Keep 80% after your first 12,000. All valuation reset fee is only $75. Wait, what? Hold on, what are the fucking rules? These are cheap. A one-step evaluation. So this is. Oh, you can go down 10%. Okay, let's look for the rules. Oh, no, no. So once you get the higher ones, yeah, that's I mean, I guess, if you. Oh, you're trading. This is a futures. You're trading contracts. And then trade Ninja Trader and stuff too. Yeah, and you have to pay 85 or $80 a month afterwards for these. These are static drawdowns. Where's like a two? I'm in hands evaluation. What the fuck? They really have a fucking account called that. Why do they have so many? They have just so many rules that it's just like there's some kind of shit that they like. Like this is probably something they make. There's a reason that anytime I look at it and I'm like, if there's a firm, they not have any regular valuations. Like I don't understand. They just call it all different. What are the values on max loss and no trailing drawdown? I have to look more into them. I've seen them around. This is the way I look at firms. Um, I just don't see much of a point to go with ones that aren't like the blue chips. Like I understand some of them are. I just don't get. I just feel like it's like that. Like if this really works for sure, but just for me, I'm just like a very risk minded person, and I'm like, okay, I can spend money with my forex funds who I know works, or I can spend FT money with I know works, but I don't know this. Now, if I had multiple people that had got this and had gotten massive payouts from it, yeah, because there's a lot of stuff of like where people like, yeah, the firms are good and they pay people out, but then when people do really well, because there are different models of firms. There are some firms that actually want people to win and make money off of their profits. And there's some firms that are just completely casino models and they're just designed for you to fail. So when you start really winning and start draining their pockets, they'll find like True Forex Funds does that to people. They'll find a way to just fuck you over. But yeah, I don't know. It seems interesting. I just there's so many rules and like so many different things. It's just kind of like I don't understand why. The one step seems interesting though. For yeah, the 100K. So you can only be in a 3% drawdown though. That's kind of, but you only have to get a 6% win. Just weird. Yeah, that's pretty much it. I wanted to go over on liquidity, guys. So if you have any questions, go ahead and ask them. and then I'm gonna hop off here. Get me some food. I'm starving. I'll have to look into that more. There's somewhere I saw this. Yeah, the 300K one. This is like, their percentages are where it's like, okay, why on a 100K, you can have 3% drawdown, but on a 300K, you can't. You have way less, and you have a target that's way more. It makes no sense to me. Like the only ones, the only one I would ever go for, I just try to go for like the fucking. I want to go for the fucking 300 or the 200 if I can, and I just look at like, why? I just don't get that. My sketchy broker is better. FCFF, first class forex funds. I've seen that's not HFT broker. So like there's a lot of new um firms that are coming out, and there's just something that sits wrong with me because, so for those of you who don't know what HFT, it's high frequency trading. There's EAs like expert whatever the fuck yeah, bots. So most firms don't allow them. Like you can't use that shit on FTMO or on uh my forex ones. Like they'll kick your ass off immediately. They know what you're doing.
See arbitrage.
And there are new firms now for that reason that are opening up and allowing people to use those. Oh yeah, enjoy your weekend, facts. Send a picture of the tat once you get done. Yeah, exactly. That latency arbitrage is a thing too, but it's like um there's no, it doesn't make sense. Like there's something, why would you start a firm and allow that if you weren't planning to fuck people? It's like, yeah, I'll just let you basically fucking drain make a shitload of money. They don't want, you know what I mean? Like if there are some really good ones, but um I just feel like all those shortcuts, all the like, I just don't understand why people even go with anything. If you're not max funded with some of the main brokers or the main firms, like why? I just don't get it. It just doesn't make sense to me. I will say these 100K challenges are interesting though. That's the one that it's like, okay, that's actually for $200 for super cheap. Um, wait, auto renews. Oh, is that a monthly part? Is that monthly? Let's see this. Oh, it's fucking monthly. Okay, yeah, never mind. Fuck that. That's why. Well, I mean, I get it's like, I guess if you, because 100K is how much are the 100Ks even for FTMO? I'm just curious. So I know the 200K is like 900. It's like 1,100 bucks on FTMO. I know the 300K, the one I got was it was like 1380 on wait, where is? Yeah, it was like 1380 on my thing. I don't feel like doing all this, but that's when I was like, damn, these are cheap, but it's a monthly fee, and you're probably getting billed through that through your I don't know, the 12, keep the 12,000 first sounds cool, but again, it's just so much like all this. I'm like, why, why is this like this? I don't know. It's just like I just go with what the blue chips, because it's like you can kill it with those. I mean, yeah, I guess the 1,400 is a little more expensive than this one. I mean, it's really not, because if you're paying $655 a month, like, okay, I'm gonna pay $655 a month. I'm gonna have a really shitty fucking challenge rules, and then it just doesn't make sense to me. And it's with a broker that is, from my understanding, not as renowned, I guess, so to speak. I don't know. Yeah, like you said, you can link it at TradingView. I don't really care to link it. I wouldn't want to link my shit at TradingView. Honestly, I really wouldn't even want to do that. So okay, so you can trade any of the CME stuff. Okay, that's cool. So you can trade. That's actually a plus. I will say that. That's actually pretty cool. You can trade interest rate futures. You can trade actual CME futures. That is a plus if to have those available. You can trade small cannabis equity. Wait, there's a fucking cannabis equity future. Okay, so that's my, yeah. That's that I can see that. that you can trade a lot of CME stuff. I don't know. Well, the real time data is like $4 a month. But yeah, I mean there are some benefits to it, I guess, but I just wouldn't want to pay that much monthly. Oh, it's $80 a month once the eval's completed. Okay, makes sense. Never mind. I think I did see that. That's why I was like, damn, they're fucking making cake. They said that somewhere. Or wait, $80. That's where it said. Yeah, you're right. Okay. Yeah, I don't know. To each his own. I can see the benefits in it. Diamond hands. Well, all right, guys. I'm gonna hop off here. What is this? If you want to save money, you can go through a service where they pay for your challenge, but you have to pass a phase with them. Okay, I'm confused. If you want to save money, you can go through a service where they pay for your challenge, but you have to pass a phase for them.
Like a third party service.
Maybe
like...
send me some more on that. Oh wait, you're talking. I don't have my headset on this whole time, guys. So if I'm just like talking over top of you guys, I'm sorry. My bad. Okay. What were you saying?
I said like there's like third party services where they'll it's like the same model as firms where most people fail, but they'll pay for the challenges are a lot cheaper with them, but you have to pass another 10% phase with them first, and then they'll pay for your challenge.
Yeah, see, there's a reason that's a business. Like you're.
Oh yeah, dude, that's like taking because most people are gonna fail that challenge in the first place anyway, so they make money off that.
I would never even think about doing some shit like the way I'm always just thinking of it from like their perspective. So like all that shit, like for instance, like any reason, like any shortcut or any like easy way or something like that or cheap way, you're never gonna. It's never gonna be better. It's just like if people just for some reason people flock to that shit. Like not saying elite trading is this. I'm just talking about like in general. Like it's like I don't know why people do that. I never like for instance I do. Here's a great example. So last week or it was like 2 weeks ago. I was like I want to get a sauna suit. So we go online and there's a sauna suit that's $12 and there's a sauna suit that's $60. And then I was like, okay, usually I just buy the $60 one because I'm like, it's gonna be better. And then I was like, really, with a sauna suit, let's just save the money. That sauna suit ripped in a fucking week. Right? It's just whenever you're cheap and whenever you try to take shortcuts, it just fucks you, dude. Like, I never am like, wow, I'm so glad I fucking penny pinched this. I never, and it's like, I get the idea behind saving money, but I think that a lot of things, it's like if you can't do it right, you're not ready to do it. Like when people buy cars and it's like they buy a car with like fucking 60% of their net worth. Like that's just so dumb because like you're not ready to buy that car. So you might have the car and you might have the whip and go flex it and drive around. And I've been young and stupid and done shit like that, but like it's just not doing it the right way. And it's just